Welcome to World Prism. Please subscribe and hit the bell icon for more breaking updates. In spring 2025, China abruptly canceled a massive order for U.S. pork, 12,000 metric tons, worth $1.1 billion, sending shockwaves through American agriculture. For thousands of U.S. hog farmers, this wasn't just a headline, it was a direct threat to their livelihoods. The pork, already processed for China, was left stranded, highlighting the fragility of global supply chains. Farmers and processors scrambled to manage looming financial losses. The move was widely seen as retaliation for new U.S. tariffs, making American agriculture a pawn in a high-stakes trade war. The pork industry, after decades of building ties with China, suddenly found itself on the front lines of a geopolitical conflict. The cancellation created a massive surplus, sending pork prices tumbling and casting a shadow over the industry's future. For years, China was a top buyer of U.S. pork. Losing that market overnight left producers vulnerable and uncertain. The shockwaves are still being felt as farmers face a deeply uncertain future. The event underscored how quickly access to the world's largest consumer market can vanish. For American agriculture, the message was clear: global trade can turn on a dime. The pork cancellation was rooted in a dramatic escalation of the U.S.-China trade war. Earlier this year, the U.S. imposed a 145% tariff on Chinese goods. China hit back with a 125% duty on key U.S. exports, including pork. The total tariff on U.S. pork soared to 172%, pricing it out of the Chinese market. Chinese importers, facing sky-high costs, turned to other suppliers. The canceled shipment was the inevitable result. Trade simply stopped. Unlike past disputes, this round left little room for negotiation. Both sides dug in. American farmers were caught in the crossfire with no quick resolution in sight. The uncertainty paralyzed business decisions, making long-term planning impossible. Pork producers now face a high-risk gamble, with a once reliable revenue stream gone. The 172% tariff became a symbol of a deepening rift, dismantling years of trade relationships. American farmers are left to bear the brunt of this global conflict. In 2024, the U.S. exported 475,000 metric tons of pork to China, worth over $1.1 billion. The canceled 12,000-ton order signaled a complete halt to this vital trade. Within a week of the new tariffs, U.S. pork sales to China plummeted 72%, a cliff-edge drop. Industry analysts estimated losses of $8–10 per hog, ballooning to over $1 billion annually. The sudden oversupply pushed domestic prices down, squeezing farmers even further. Nearly 500,000 metric tons of pork now had no destination. The loss wasn't just financial, it meant wasted resources and immense stress for farming families. The domino effect threatened the stability of an entire sector. American producers had tailored their operations for China. Now, that business model is in jeopardy. The market's disappearance was swift and devastating. The fallout continues to ripple through rural America. The pork industry's future is now deeply uncertain. As China shut out U.S. pork, it quickly turned to new suppliers. Brazil, already a global agricultural powerhouse, stepped in to fill the void, offering pork at competitive prices. China also strengthened ties with European nations, especially Spain, signing new trade deals for pork and other goods. These moves were about food security. China wanted stable, diversified supply chains. For American farmers, the loss is likely permanent. Once new suppliers are established, regaining market share is nearly impossible. Chinese importers are signing multi-year contracts and integrating new partners into their logistics. Meanwhile, China is ramping up domestic pork production, aiming for self-sufficiency. Economist Andy Zhai says China is prepared to manage without U.S. agricultural imports. By turning to Brazil, Spain, and its own producers, China is insulating itself from future trade disputes. The global reshuffling leaves American farmers out in the cold. The U.S. market share may be lost for good. The trade war's pain isn't limited to pork. China's tariffs hit a broad swath of U.S. agriculture, including beef, cotton, and soybeans. U.S. beef now faces a 147% duty, and China has blocked hundreds of American beef facilities. Potential losses for U.S. beef could reach $4 billion. Cotton and soybean farmers are also reeling. In April 2025, sales to China dropped by 50%. Cotton is especially vulnerable. 85% of U.S. cotton is exported, and domestic processing capacity is limited. Soybean shipments to China are dwindling as China turns to South America. The resulting surplus is driving prices down, forcing farmers to sell at a loss or not plant at all. The ripple effects hit seed suppliers, equipment dealers, and rural communities. China's strategy is clear: target politically sensitive sectors to maximize pressure. The interconnectedness of U.S. agriculture means a crisis in one sector quickly spreads to others. Many family farms now face unbearable financial strain. The trade war is pushing rural America to the brink. Losing the Chinese market isn't just about volume, it's about unique demand. China buys parts of the hog Americans rarely eat: heads, feet, organs, delicacies there, nearly worthless here. This allowed U.S. processors to maximize value, selling prime cuts at home and variety meats abroad. Without China, these parts are sold for pennies to rendering plants, a massive financial loss. No other market matches China's scale or culinary preferences. The U.S.-China pork trade was a perfect fit, ensuring whole carcass utilization. Now, that balance is gone, and the business model is broken. The same vulnerability exists in other sectors, like cotton, which the U.S. exports because it lacks domestic mills. American agriculture relies on export markets for specific products. When those vanish, there's no quick fix. The Chinese market was irreplaceable because it fit the U.S. system so well. Now producers face a harsh new reality. The loss exposes deep structural weaknesses in American agriculture. As of autumn 2025, American agriculture faces unprecedented uncertainty. The pork cancellation is just one symptom of a larger, volatile shift in global trade. Farmers are struggling to survive, managing losses, finding new buyers, and coping with free-falling prices. New markets in Southeast Asia offer hope, but they're much smaller than China and slow to develop. The crisis is forcing a rethink. Relying on a single export market is a risky gamble. A shift toward domestic markets and diversified trade will take years and major investment. For now, the industry remains exposed to global politics. Negotiations continue, but public rhetoric is confrontational, leaving little hope for a quick fix. For farmers, tariffs and trade balances are no longer abstract, they're personal and painful. This is the heavy price of a global trade war.